All right, good morning, everybody. Yeah, so you're welcome back to my channel, and I just want to quickly show you some things on how trades played out yesterday. Um, so we had some major wins yesterday on gold, on GU, and also on UJ. So that means on XAU USD, on GBP USD, and also on USDJPY. So those were our big wins yesterday. Like the strategy actually played out very fine, and I want to show you how they played out yesterday. So first, I will start with gold, and yeah, the essence of showing this is just to see how you can also apply the line strategy to your trading. You can apply it in your trading. Okay, so just like the first video I showed you on the two line strategy, that you come to the previous days, the previous days, the previous days Asian high and Asian low. So yeah, this is today printing by the side here. So I'm not treating today, I'm treating for yesterday. So the way I took the trade of yesterday on gold was this, like this. So I placed my horizontal lines on the Asian high of Friday, that's January 26th, and then I placed another horizontal line on the Asian low of Friday, right? So that's the line you can see here. And what I was just looking for yesterday was a reversal around either the Asian high or Asian low. So like I always tell you guys that trading is less about strategy. Yes, the strategy is okay, but it's also about discipline. It's about discipline. It's about risk management, right? Like we taught you in the bootcamp training. So this was what played out, and as you can see, um, whenever I'm taking my trade on these pairs, I'm not trading it. I'm not taking it on the Asian block. No, I want to have a good night's sleep, right? So I just wait for the thing to play out, and if it does not touch the line, it means okay. I leave. There's no setup on that pair for the day, right? So you can see here, this happened around 4:30 yesterday. That 3:30 or 4:30 that this happened, and so the first time you can see this big candle. It came around 4:30 and it touched this line, right? But it would be wrong for me to take trade. I am looking for a reversal on this line. A reversal. When there's a reversal pattern on this line, that's the only time I can decide to execute my trade. Excuse me. So that was what happened here. So I had to wait after this touch. You can see now after this. Let me try to expand this so that you guys will see it's much better. All right. So so now look at this candle. You know, there was this long weak rejection candle to the top. Now this week closed above, but I always prefer to see another confirmation of a close that is above the line, above this Asian, above the previous day's Asian high in this case. So a rejection was happening just on the Asian high of the previous day, right? So after this candle, maybe I should expand it a little bit more. Okay, it has gone beyond boundary. No. Okay, yes, sir. Okay. So after this high, after this candle close above the Asian high, then I hope another candle opens. Remember that we're working on 15 minutes. On 15 minutes. So, so on these 15 minutes, then the next thing was that now this opens, this new candle opens, but it's closed below this line. It's closed below the line. It means that what? I can't execute my trade yet until I see a rejection pattern. Now, if this candle had closed above the line, right? If this candle had closed above the Asian eye, I'll have taken my buy position. Remember that according to what I showed you in the last video, because this Asian range, because today's Asian range is well above the 200 EMA, right? That's why I know that okay, I'm looking for a buy setup, right? So that's what's dictating I'm going to take a buy or a sell setup, right? So this is what happened. Now, if this candle had closed above, I would have taken my buy position immediately and put my stop loss here, right? And always remember, like what I told you during the boot camp, that you're only targeting 0.5%. Your stop loss, you are risking only 0.5% per trade, right? You are risking 0.5%. Never forget that. Excuse me. So yeah. So if this candle had closed above, I'll have taken buy and calculated my 0.5% and put my stop loss here, right? But that was not what played out, right? So it still came down. Then it took out the next candle, took out this low that was established. Then after the low, there was a candle, there was a buy candle, right, that went above this line, that went above the Asian app. So the next thing is what? Is just to take my buy. So I took my buy here and I put my stop loss here. So I took my buy upon the close of this candle and the opening of this. So at 2024.51, I took my buy and I set my stop loss to 2020.49, right? And see what happened. So we had so this trade was executed at 5:45 p.m. I think that must have been 4:45 our own time, right? So it was executed around that time, and then what? It started going up. So we had a rejection, a little bit of rejection. Now, right? And see, we had an high here. Now, if you had taken your, how do you know that okay, where you should close your trade? Now, what I usually look for personally is that um I look for areas where there is liquidity, right? Where there is a reversal in the market, right? And this is one of those areas, and this is another. So I was expecting that it was going to go here, but it did not get here. So it went here, right? And immediately you see this kind of rejection. I mean, this candle. This happened around. This was around 8 p.m. our time, or 9 p.m. our time yesterday. Yeah, it was 9 p.m. 9:15 p.m. our time, right? And you can see. So this week it's retested. It's tested this point of um, what do you call it now? This liquidity point. It's tested this liquidity point. Then there was a massive rejection. So the candle closed. This was almost half of the candle, right? Right. So if you look at this it opened at 2030 and it closed at 2032. But the high was 2035. So this is already about half of the candle. So this was where I closed my candle. I closed my trade here. So I was able to catch like 80 pips on this trade. 80 pips, which is good, right? Because I did not record any loss on this trade, right? So 80 pips is good. Now I had risked what? Um I risked 40 pips for this trade and I caught 80 pips. That's 1:2, which is very good. That's 1:2 RR, right? So you closed it. So that's that on good. And then the next trade we took yesterday was on GU. So on GU, so this was what played out on GU. So again, I placed my two horizontal lines. I placed them on the high and the low of the Asian session of Friday, right? And the pattern GU was given on to us is a rejection pattern. Sorry, it's a sell pattern rather, sell pattern. right? So what was I looking for? I was looking for a rejection either on the high or on the low of GU and see when that's played out. Excuse me. Excuse me. So that played out here, right? So a rejection because my yesterday's Asian box was submerged, was under the EMA, the 200 EMA, right? And then see what happened. Now this gives a perfect rejection pattern here, a perfect reversal, right? I think this is called the morning star or something. So it doubly confirms the strategy, right? So there was the first candle, this first green candle that hits the high of this Asian session, of the Friday's Asian session. Then there is a rejection, an inverted cross, right? And then the next candle that opens, it closes below that line. So this is the perfect place to execute your trade, to take a sell. So this was 10, this is like 9 a.m. yesterday. So upon the close of this candle on 15 minutes, take a sell and put your stop loss just above this high, about this new high that was created. So you take your stop and your sell position, and your stop loss, you put it just at this high or a little bit above the high. So let's just calculate that, and this is that's so it means you are risking only 8 pips, 8 pips. And it happened at the heart of the London session, right? At the beginning of the London session, that was when it happened. And if you had left that trade, see where you'd have taken out. So you are risking 8 pips to make 42 pips, right? Or let's say you decide to close because usually, I think it's safer to trade from rejection pattern to rejection, right? So if you closed it here, you'll have still made 31 pips. Or if you decided to close it here upon this massive rejection to the up at the New York session, this will have been 42 pips. So that's 8 to 42. That's 1:5. You have made 1:5 on that. So you are risking 8 pips to have made what? But you know all the you are risking 8 pips to make 42 pips. This is 1:5, which is a very good one. Now if you look at this, now it is what is trading? Trading is really what happens in the time between year and year, right? Now look at this. It started falling, then you saw a retrace. Now, personally, the way I take my trades is that if I'm ever going to take any trade, I know that I'm risking this amount of money. Um, let's say I'm risking 0.5% of my trade, actually, right? So if I'm risking at all, I'm risking 0.5, whatever value it gives me. So let's say the value is giving me is $200, right? I'm risking that $200. Now, if I see a perfect strategy, it's just good to wait for it to play out. So if you are saying, okay, maybe because you saw this week now go and you close your trade, that's not trading, that's gambling. So it's one of two things. It's either this thing comes to my area of interest, and then it comes to my level of TP, where I take my TP, or it hits my stop loss, right? Because that's 0.5% is how much I'm able to bear that amount of money. I'm able to bear that loss if it happens. But if it does not happen, then I'm ready to wait for that for my trades to play out to give me the maximum profit I can get. Right? But everything is still based on calculation. You have to be calculate. So normally if I'm going to take this trade, I will have this would have been my target personally. This point of liquidity here will have been my target for take profits, right? So I'll just have put a line here that okay, when this trade reaches this level, I'm good, right? You can see this point of liquidity, it was retested there. Then here also a rejection. The points of rejection in the previous days, those are the places I'm looking for. Now, from where we took this trade, let me zoom out a bit. Excuse me. From where so I've just taken here from here. Okay, from here to here, that will have been what? 20, that's 28 pips. 28 pips. So I'm still risking 8 pips to get 28 pips. 28 pips is 8 to 28 is that's 1:3.5. 1:3.5. So I still have made 3.5. So is of whichever way it happens, it's either I lose 0.5% of my trade, or I make what? Times 3, times 4, or times 5 of my trade. So that's the way to trade, guys. That's the way to trade. And if you look at it, this makes perfect sense. The market opened, like I entered the market at London session and I closed it in the beginning of the New York session, which is very, very all right. So this trade ran between 9 10 p.m. and 10 a.m. their time to 3:30. That's about 5 hours 30 minutes, right? Which is worth waiting for. That's the time that is worth waiting for you to watch, for you to make the kind of money you want to make in the market. All right. So the last thing I want to show you now is your that's your excuse me now. Sorry, I want to readjust this back to my. I'm monitoring for today's trade for opportunity, so I'm adjusting that. So the last trade we took yesterday was UJ. UJ is USDJPY, and this was what happened yesterday. Okay, so with what we have here yesterday, you can see that the yesterday's Asian box was above the 200 EMA, right? And again, as usual, I'm waiting for I'm waiting for I'm waiting for uh, a rejection, a reversal pattern on the Asian high or the Asian low. I'm waiting for a rejection pattern on the Asian high and on the Asian low, right? And this was what happened. So you can see that okay, we had a pattern here, and so yes, this UJ street was not very smooth. It was not very smooth, but um, whenever you don't see smoothness in your trade, it's um it's probably because there is going to be a how do I say this? There's going to be a reversal in the market, most likely, right? So you can see this. Let me zoom out a bit again. All right. So this was a trade that played out yesterday. So there was this long wick candle, and then there's a close. Now this is the first close. I love having at least one close, but usually I'm very, very comfortable with having two closes above the open, two closes above the line, rather above the line, right? So UJ gave us a buy signal also, and this is the at the opening of the London session here. So this is the first close, right? Which is it would have been a perfect time to enter, but yeah, if you had entered there, it would have still been good. But usually you can still wait for the last candle for another candle to close above. But this next candle did not close above. This next one closed above. So either you had entered there or if you entered there, it's still okay. So you enter for buy here, but you set your stop loss just a bit below this, right? And see what happened. There we had a reversal, right? So this candle, it's depending on where your stop loss is. In pro cycle, we like putting our stop loss just below, like about to give it allowance of like 5 or 10 pips, right? About 10 pips below. So if your stop loss is here, it means when this week came, you still have been secure, right? Your account will still have been secure. But see what happened. started going again. There was this reversal, right? So if you had missed this entry, this is also another opportunity for you to enter. A close above the line, then a second close above the line. Personally, this was where I entered the buy market on this trade. I entered buy here, and okay. Now my target was that I was expecting that UJ would close. It will reach this level where there is rejection in the market, or this place, right? This place. There's a rejection here from the previous day, right? So I was expecting UJ to reach here, or to reach here, the places of reversal in the market, right? The liquidity points. That was what I was expecting. But see what happened. It came here, and when you see this kind of candles, these long wick candles, right, that reverses below. These are an inverted hammer, right? That's a strong indication that the market is going to sell. The best thing at that time is just to get out, right? So when I saw this, I was still in the game. Then it came down, and then it went up again. These are the open of the New York session. Then when I saw this rejection, now this candle closed below the first candle, right? So this is strong. This candle further confirms that this is what they sell. It confirms this hammer, inverted hammer. So it was at this point that I closed my trade, right? So I think I didn't close that trade very early, so I just recorded like an $84 loss on that. But if I had closed it early, I would still have made 8 pips on it. I think I closed it somewhere here, or something like because at this camera I closed it. So I would have still made 8 pips on this trade if I had followed the normal stuff, right? So if you see rejection patterns in the market, it's just good that you take it to them, take note of them, and you follow accordingly. Yeah, so that was that on the trade from yesterday. So we had all wins yesterday on gold, on GU, on UJ, gold, GU, UJ, right? We had wins on them all, and so yeah, I would advise you that you should please follow this thing, um, follow this strategy. But much more important is that you should have a very smart risk management plan. Risk management is what will help you and save your backside on this on in forex. Risk management, discipline, and the discipline to stick to it. So please and please, always be disciplined. So that's that for today, and I hope to see you guys very soon. So I got some questions from you guys, and I'm going to attend to those questions in another video. All right, I'm going to attend to those questions in another video. So you guys should have a wonderful day and enjoy. Bye.